Okay, so I had no specific agenda other than I wanted to be available to answer questions on the draft documents I sent over. Do you want me to go through each draft, or how would you like me to proceed? I just want to make sure I give you the venue to ask questions, get clarifying, provide any final edits on the documents before we proceed with finalizing. I did receive your email, Director Richards, or Commissioner Richardson, and so I just making sure there's no other um, requested edits or anything like that.
Yeah, I think Matt, if you could just kind of walk us through the documents, and then if there are questions, I don't think we have many on this end. And you said mine were more, I guess, administrative, just making sure that we're putting the right names in for the right time period, or whether we're looking at the end of December or we're looking at the date of submission. But yeah, if you could roll us through, I'd appreciate it.
I'll do that. So I'm going to share my screen. Screen. I'm hoping you're seeing the single audit. Okay, so I'm going to start in reverse order. I'm going to kind of walk you through. We do two different audits. We do a financial statement audit, and we do a single audit. A single audit is your federal funds financial audit. Because the county received and expended more than $750,000 in federal funds, we get to do a federal funds audit. So I'm going to go through the results of that, because I think it'll set the table and kind of explain why we're where we're at as far as audit process and so on. So if we go to page 11 here, this kind of goes over the results of the audit. So we will be issuing an unmodified opinion on the financial statements, but we're going to issue a material weakness over financial reporting. I probably should take some time and define what material weakness and significant deficiencies mean. A material weakness means that there is a lack of control whereby a material transaction would not be caught or corrected by the county's internal control system, and therefore we need to issue a recommendation that be enhanced or corrected. Significant deficiencies are items that are matters that we just need to bring to governance's attentions, and then deficiencies are kind of like best practice things. At this time, we do have the material weakness, which I'll talk about in some more detail over financial reporting, and then we also issued a material weakness over federal programs. So we did audit the Fiscal Recovery Fund, or your ARPA funds, for our major program this year. As far as how it works, because you are issued a material weakness, you previously had been a low-risk auditee, you would be a high-risk auditee for 2022 and 2023 at least, and then it depends on the results of those audits whether you could return to a low-risk auditee. So we'll talk about the first one, material weakness, internal control over financial reporting. The county definitely had some turnover in key management personnel, as well as some extended absences due to personal matters relating to some of your financial accounting personnel. And this really just created significant challenges and delays completing the audit, as well as getting complete and accurate financial information to complete the financial statements. And so because your auditor is prohibited from being part of your control structure, we did have to issue a material weakness, because we felt that the amount of corrections, the amount of going back to the county and or any consultants the county might be working at was a little more than we were comfortable with. And so we are recommending the county should evaluate the sufficiency of the financial accounting department and assign duties, including preparation and review of that information, to make sure that you're following your document policies and procedures. The county has provided a very detailed corrective action plan that talks about the change in some of the reporting structure, as far as what positions are going to report to who, what positions are going to have what roles and responsibilities, and that you're filling open position in the finance and accounting department. Any questions on that first recommendation?
No, none here. I think we're all we're painfully aware of the absences we had and the vacancies, but
Yeah,
Glad we're starting to see some fill, so.
exactly. So the next one has to do with allowable costs and allowable activities. And so we issued a material weakness over compliance and internal control. So the county did utilize the fiscal recovery funds, and those funds were coded against different county operations, mainly sheriff's department expenditures. And so we noted that there was a certain amount of the expenditures whereby they were asked for under two different programs, the fiscal recovery funds and also the coronavirus relief. So, i.e., you were potentially double dipping. We've made the county aware of that, and it was corrected. But like I mentioned, with the financial reporting controls, were prohibited from being part of your control structure. And so, since we had to alert you of that error, in addition to the fact that several of the time cards in the sheriff's department were not being signed off on by supervisors, there were some other controls that help mitigate that. But kind of when we looked at everything and how that fiscal recovery fund was administered, we did issue a material weakness over how that was done, just in combination with the double dipping as well as the missing signatures on the time cards. So that's that, along with that, just like with the financial reporting recommendation, the county has provided a corrective action plan at the back, talks about that they've already worked with the sheriff's department to talk about the review process for time cards, and then along with the overall overhaul and enhancement to the financial and accounting department, that would also help alleviate this thing in the future, hopefully. And then the last one has to do with your schedule of expenditure of federal awards. That when we were provided the what was proposed to be the final draft of this schedule of expenditure of federal awards, there were numerous programs where the amounts had not been updated from prior years, and therefore what could happen if we did not detect that is we could have potentially audited the wrong program, or it produced a inaccurate CFA. So much like the financial report finding and the finding over the program, we did issue a material weakness over that because we cannot be part of your control structure, and we felt that it was materially misstated if the way it was presented to us. And just like with the other two recommendations, the county has provided your corrective action plans on this page, and this page. And then if we look on the next page on the summary schedule of prior findings, we had a finding that we are following up from prior years in the Human Services Department over some foster care file work, and we are happy to report that corrective action was taken for that, and so that one will close out. So, any questions on the single audit results, the corrective action plan, the kind of the nature of any of that?
No, I would, again, probably all three kind of stem from the same root cause. So, but having your eyes on and making sure we were straight. I mean, again, I understand you're not part of our controls, but it was a good catch, and I'm glad we had the opportunity to make sure all the books were straight. So I don't think any of them are ones that we'll see repeated going forward, just because it was such a unique set of circumstances.
Yeah, I mean, as is mentioned in the recommendations, you had a couple turnovers in key positions at the county, as well as an extended absence with some of your other personnel that work with the finance department. And I think it was just for lack of a better word, a perfect storm of just the people not being available and not being there to detect some of that. So I'm going to jump over to your draft financial statements if there's no further questions on this single audit part of the results.
Not seeing any in the room, so please go ahead.
So as has been customary in the past, the county prepares its own financial statements. And so the county does contract with a individual to help assist that, because the county has historically not had a large finance and accounting department that has had the adequate staffing to be able to do that. And so that's been the same thing this year. So I'm going to walk through the draft. It's somewhat similar as last year. I'm not going to drive through detail unless you want me to go through anything specific. Still in draft form because we wanted to make sure that there was no any final edits. We need to get a signed representation letter from management, which will include, I believe, Chair Richardson, as well as we'll have Tiffany and Jim Ray sign it. So here's the transmittal letter, org chart we won't talk about too much. Management discussion analysis. This is a really good place to start with a set of financial statements if you're not in governmental financial statements all the time. It's like a 10,000 foot overview of kind of what happened in the county for the year. And so that's a really good place to start reading financial statements. Behind your management discussion and analysis is our auditor's opinion. And so, as I mentioned, we will be issuing an unmodified or a clean opinion. I should point out that the opinion does look.
You froze on us. Yeah. Matthew, you're frozen at your end. We'll wait. Matthew?
I'm back. I think I might have closed on you, is what I think I heard from the last audible thing. Where did I lose you? Right after management discussion and analysis?
Pretty much you were saying that that was the 30,000 foot overview and a good place to start, and then we lost you at that point.
Yep. And then after your management discussion analysis, you'll find our auditor's opinion. So if you've looked at our auditor's opinion in the past, this will look a little different. We as auditors need to do implement some new standards for how we audit, and with that came an update to the actual auditor's report. So the actual opinion paragraph used to be buried in the middle of the letter. Now it's the first paragraph. So we will be issuing an unmodified or a clean opinion on the financial statements. Behind that is your government-wide financial statement. So this is a full accrual view of everything the county has. Your cash, your capital assets, outstanding debt, and then your net position, which is basically your assets less your liabilities, is then what you have left in that position. So at the end of 21, the county has 29.4 of unrestricted net position, and then about 65.3 million of that position is basically tied up in capital assets. This is the full accrual or government-wide, basically an income statement, or how the county collects revenue and how you spend it. Kind of an upside-down income statement in that the expenses are first and the revenue is at the bottom here. Really, just like with the government-wide, it's got all the activity, it's got all the full accruals and everything. And then behind that is kind of where you all are probably used to spending most of your time. We have our major funds. We have our general, our road and bridge, human services, and sales and use tax. And then you have on the next page, you have a column for all your other non-major funds and then your total governmental funds. And so just somewhat different from your full accrual, you'll only see the cash, investments, receivables, and you will not see capital assets or like long-term debt on these, which is consistent with modified basis of accounting. There's your reconciliation to get from your governmental funds to your government-wide, and then your governmental funds revenue. So how much in taxes did you collect, how much in expenditures did you make, and then how much was your increase in fund balance for each of the respective funds. So there's that. Behind that is a reconciliation to get you from the governmental fund financial statements to the government-wide income statements. And then we have our custodial funds. So we have kind of three main custodial funds. We have the property tax fund, the custodial treasurer's fund, and we have other custodial funds. And custodial or fiduciary funds are funds that the county holds that are not your funds. So the easiest example to understand is the county collects property taxes on behalf of other entities within the county, i.e. a fire district, a town, a special district. And so those taxes, while you collect them, are not yours. So you retain those in an account, and then you remit them to them on a regular basis. So that's all accounted for in these fiduciary funds. We had implemented that standard a couple of years ago. And then behind that is a whole bunch of footnote disclosures that kind of provides further context on how assets are valued. So there's a footnote about all your significant accounting policies, which we didn't have any huge updates in the accounting policies for this year. Note 3 gives you good information about the cash investment holdings of the county. Note 4 has very detailed information about the capital assets held by the county. Not a ton of activity this year as far as historical stuff with the county and capital assets. And then Note 5 has information about the long-term obligations or debt. So we did issue some long-term capital lease obligations as we've historically done. So we issued about 13.1 capital lease obligations during 2021. And there's a lot of information about kind of the nature of that leasing and all that sort of stuff, as well as some detailed information about when payments are due and so on. Note 6 talks about net position, which we talked a little bit about, talks about how we calculated the net investment in capital assets. Note 7 talks about the retirement plan that the county participates in. And Note 8 talks about your deferred comp plan. And then Note 9 talks about any future commitments that you might have for anything. And then really, Note 10 talks about your transfers and interfund receivables and payables. Note 11 gives you a little information about risk manager or how you're kind of insured, how you manage that. Note 12 talks about your tax spending and debt limitations, i.e. your TABOR information. Note 13 talks about the impact fees and the abatements. Note 14 talks about upcoming GASB pronouncements. So the one I want to draw your attention to is GASB 87 or leases. So as has been kind of much discussed for many, many years, both from a private company reporting and governmental reporting, the concept of a operating lease goes away. And so items that might have been treated as an operating lease in the past will now come on the books as a right to use assets and a right to use liability. So the county is aware of that and is working with consultants to get that implemented. Note 15 is the subsequent event. Subsequent events are just disclosed in order to give context to the user of the financial statements. So the main subsequent event that we're disclosing with regard to the county is that the county received about the other half of the $2.6 million of fiscal recovery funds in 2022 during 2022. And so that just helps people understand how funding might work for the county and so on. And then behind that, is there any questions on footnotes before I jump into budget to actuals and required supplementary information?
None in this room, thank you.
Behind the footnotes is required supplementary information. So you have your budget to actual comparisons for all of your funds. You have your major funds. You have original, final, and actual. So this shows how we performed against the budget. You also have that for your road and bridge, human services, and sales and use tax funds. And then we have all of our non-governmental or non-major governmental funds. So you have some special revenue funds that are reported in the back, debt service funds, and capital improvement funds. Nothing crazy that we need to report in there, but I wanted to just make you aware of kind of how it works. Did I have a question?
Yeah, Matt, this is Jim Ray. The county and let me go down a rabbit hole. The county has never budgeted for capital lease proceeds and the expenditure of them. Do you think that's something the county ought to change going forward?
I think you froze again, Matt. Hey, Jim, we can. I know Matt froze. Can you hear us?
Yeah, just barely.
Oh, okay. Well, I know we're loud in this room, but it looks like Matt dropped off. He'd frozen previously and kind of dialed back in, so we'll wait for him. Oh, there he is.
I apologize. I seem to have lost connection. Where did I lose you again?
All righty.
Hey, Matt, let me ask a rabbit hole question.
Oh, I got your rabbit hole question, Jim. Did I?
Okay.
I think I got it. So I would defer to the county commissioners and whoever the finance director is. I would tell you on how capital projects and capital purchases get budgeted is very different from entity to entity. Some of them do like a multi-year rolling budget. And other ones just budget for whatever they think they're actually going to spend for in a year. But obviously with the whole right to use asset and how all that sort of stuff, it likely will change how budgeting occurs. Does that make sense, Jim?
Yeah, it does, and that's the other piece of it is now you've added a whole ton of operating leases in effect that you're going to have to treat the same way.
Correct. Now they probably were budgeted for as rental payments in the past, but you'll want to put them in their proper category. So
I think Jim and Matt, I think that's one of those topics we can have our budget steering committee take up throughout this year. So we can, if there's a change to how we want to account for things, we can have some in-depth discussion on the significance of those changes before we decide to make a change, or if we have to make one. So, thanks.
Yeah. So that was it, because I know you all have had the draft financial statements. I will come back and present them in a formal manner when we present to the whole county commissioners in a full-on regular commissioners meeting. As far as just required communications, key disclosures, your disclosures of your cash, capital assets, long-term debt, commitments, and your subsequent event note about your things. We'll provide the listing of corrected, uncorrected misstatements, which I know Jim has seen and has incorporated in the financial statements for the corrected misstatements, as well as there's just a handful of immaterial things that we did not deem that we need to correct. We just had some delays in the audit process, as we've discussed already, so I don't really want to belabor that, but it's from an auditor communication. We are supposed to let you know about that. We didn't consult with anybody outside of our team. There were no significant matters that affected our retention as your auditors or anything like that. And we really had no significant disagreements with management or really anybody. I would say everybody's been collaborative. It's just been kind of a little bit of a prolonged year, but I'm sure the county and everybody will work to get it back on calendar. So.
No, I appreciate all that. I think the big question in front of all of us is just timing. I know at this point, once we go final from draft, I believe you have some internal QA/QC before.
I'm going to try and get you guys a representation letter either today or tomorrow, and then.
Oh, okay.
I think we could be final by early next week. So.
Okay. And when do you think we could look at getting the final presentation of 21 for acceptance?
I think you'll be emailed the final reports either late this week or Monday, and then we'll just put it in there. And I guess it would depend on when your commissioner meetings are. So, but I think you'll get it. I mean, the 6th is February 6th at the latest, and it won't take Jim very long to insert it.
Okay. Yeah, if we could, our next scheduled meeting is actually the 8th of February. If there's some availability to even take that presentation by Zoom, I think we'd all be happy to close the books on 21. And I think we may have lost you.
one of the things that's going to need to happen. I don't know who replaced Kyrie, but the highway user tax form is going to have to be done, and normally she did that.
Okay, yeah.
And that was like done in May.
Okay, yeah. Bailey Short has picked that up, and I know she's completed the reports for, you know, our inventory of roads we took up at our last meeting. So she's on top of that. So.
Well, good. How is the lease work coming? Do they have all the? Does the vendor have all of the leases?
Yeah, I'm getting a nod from Tiffany that is a yes. So
Good.
I know that's
How many were there, Tiffany? Ballpark.
Roughly 25.
Ouch. Okay.
I don't know.
And who figured the discount rate? Was that done by the vendor or was that done by the county?
As I said, most of the leases have a predetermined interest rate, so the ones that don't, I guess we're still gonna.
I'm back, and I turned on video with the hope of keeping the connection stable. I apologize.
No problem, Matthew. I guess I'm not sure where you froze. We were just
so we were discussing when you could get finals. I think we could probably get you finals by Monday at the latest, and that would give Jim some time to insert it and remove the draft stamps off of your financial statements. So I don't know when you would want to have it in the board packet for the 8th. That might be tight. So I don't know if you wanted to schedule a special meeting, because I just want to make time for like any the technological things that always seem to come up, i.e. Zoom not working for me today. So, but
okay.
It's up to you all. So,
yeah.
But you'll be seeing a representation letter from us to sign and get that executed, and then we'll close this out. So I'm basically done, and it's formalities of just taking draft stamps off and me giving you final letter-headed auditor's report.
Okay. Yeah. So I think we'll look for that on Monday. We've built a discussion piece on the agenda for Wednesday. If we're still working through some last things, that's fine. We'll do a special meeting. But I think Monday we can huddle again and just kind of see where we're at close of business.
Okay. I'm going to try and get it out as soon as possible. It likely will happen this week, but I don't want to absolutely promise, because I don't know what's ahead of me in the get it through production department. Yeah,
totally understand. But at the very least, it looks like we'll be able to at least publicly announce we have our final in hand at our Wednesday meeting, and if we have to schedule the presentation afterwards, we'll do so.
Yeah.
Sounds good. Anything?
Okay.
Anything else in the room? Yeah. Just while we have you on, I did want to introduce Sean Fletcher, our new county manager, joined us on the 30th, and will be appointed as our budget officer on Wednesday.
Thank you.
Well, welcome, Sean. I appreciate you willing to come and work with the county, and we look forward to working with you. So
I think that's all we have at this end. Thank you much, Matt. I know it's been kind of a slog to get through, and to you as well.
You have one of those years every now and then, so yeah. we'll work through it. We'll just move forward. That's all I have to do. We'll push it forward. So.
Thank you. And to you as well, Jim. I know it's been a difficult year, so thank you for keeping at it with us.
Absolutely.
All righty. I guess we are done then. Thanks.
Goodbye.